Mortgage madness, can't you see? Living free ain't cheap for me. Interest climbing like a tree. Paying dues to destiny. Bright neon dreams in every room.
Hello and welcome back to the Mic'd Up Show, where every mortgage has a story. Good morning from San Diego to you. I'm Michael Zhao, and soon will be joining us will be Michael Kelleher. And today we're having the privilege of having Ryan Grant, president of Neo Home Loans, join us today, to where we're able to talk deeper, not only into the insight of the mortgage industry, but also the deeper insight of how he begins to think about not only leadership and sales and how to bring it all into fruition. So thanks, Ryan, for joining us today.
Excited to be here. I've followed you guys' show for some time and appreciate the work you guys do for our industry.
Cool. Thanks. Funny enough, I actually don't get a chance to meet a lot of the leadership within the MBA. Kelleher is really deeply ingrained, as you know, inside of the Mortgage Bankers Association, coming back from the advocacy conference in Washington, D.C. from last week. And this week, as we dive into it, we're really into not only the expansion of the mortgage industry, but looking into how we can work with each other rather than against each other. So, Ryan, you started off in the business in originations, and you know, a lot of people, and if they want to look you up, can find out more of how you started off, and you know, you wanted to be in law and so on and so forth. But I'd like to go a little bit on the sales side and asking you a few questions about marketing. And you started off being a marketing animal, I would say, you know, either on the telephones or actually meeting face to face. Can you tell me if you did that by training or you did it by trial by error? Because when we get into leadership and talking about that, I'm going to be asking you some similar questions, because not everybody gets to get trained into leadership. They usually succeed by failure. So what did you do, and how did you get there when you first started in the business?
When I first started, I started in 2005, but I was just a refi call center guy. And I was actually going to leave the business in 2010. But my dad convinced me to stay and meet realtors. And so I really feel like I started my career in relationship based, like actual, you know, mortgage originations in March of 2011. And I didn't have a database of clients. I'd never met a realtor. I'd never done a purchase loan. And so I didn't really have any options to stay in and call my clients and refinance people. And so I saw a big void in what I would consider mortgage advisor visibility. There were, you know, mortgage advisors were not very visible at the time. Social media was still kind of getting underway. There wasn't a lot of participation in realtor events. There wasn't a ton of people going to open houses. And so I just said, well, you know, I looked around and I said, well, I don't know anything about this, but I think the best way to get business is just to be in front of the people that can give it to you. So I was just constantly around the real estate community at open houses, and I would just take pictures and I'd post them on social media. And so the word that I heard very early in my career was omnipresent, and you seem to be everywhere. And that was really helpful for me, because I became one of the most highly visible mortgage advisors in Orange County. Even though I wasn't the highest producing, it only took me about 3 or 4 years to become the #1 originator in the county. And that was just through being everywhere and being visible. I wasn't different. I wasn't doing anything special or unique. I didn't have any unique products or programs. I just knew that if I was highly visible in a time where most people weren't, then I could kind of attract market share, and everything just evolved from that.
So how does that translate for you, being visible when you were in sales and being a top producer, to saying, okay, now that I've reached the pinnacle of being a salesperson, let's just not own the business. Let's really own and lead the business. So how does that translate into becoming a leader to where you are today?
I think visibility as a leader is incredibly important, but it's not just visibility. It's also helping people understand what you believe. There's a lot of great leaders in the mortgage space, right? A lot of presidents of mortgage companies or owners of mortgage companies, but I don't see them very often. And if I do see them, I don't hear them, right? Like, I don't know what they believe in. I don't know the vision or the future of where they believe the industry is headed or where their company is headed. And so it's, when I look around the scope of our industry, I think silent leadership is not helping anybody. I think that, mortgage leaders, mortgage company leaders, mortgage company owners, they have to really be out, setting a vision, telling their teams, not only their teams, but the industry, what they believe and where this industry is headed, because we're going to see more change in the next 24 months than we've seen in the last 24 years. And
I agree.
As an originator, as somebody who is, tying their business to a mortgage company or a mortgage partner in some way, I really better believe in where the leadership is taking that, right? Because I'm a part of it. And so to me, I want to make sure that our team at Neo and Better, that they know what we believe, they know what matters to us and to them, that we operate in partnership, and they know that we are very much ahead of the curve and ideally setting the pace, because then they always feel confident, right? They feel like they're going to be on the leading edge of innovation and opportunity. And if I was in an organization where I wasn't hearing that, not just directly from my leader, but that my leader wasn't telling that to the industry, I would feel a little bit insecure, right? Or maybe a little bit confused or uncertain.
You have the unique perspective of not only leading Neo and also having leadership over at Better. What is the mission for Better versus or the same mission potentially also for Neo? And how does that translate into what you think should be the mission for either the Mortgage Bankers Association or the mortgage industry?
Yeah, what was interesting is, when Better first reached out to us about the idea of the partnership, to me, it was a very fast no. I actually laughed and I said, that's like asking Danielson to train with Cobra Kai. We couldn't be more different, right?
Sure.
But when we got curious and we stayed open-minded, we very quickly realized that we actually both had the same intention. We were just approaching it from two very different angles with very different strengths and weaknesses, right? We were approaching it from the angle of, changing people's lives through advice, guidance, strategy, planning, being the most highly educated, financially literate mortgage group in the country. They were approaching it from lowering costs, making it easier, making it more accessible, and making homeownership, making that an opportunity for more of America. Just, same concept. We still wanted to create more homeowners and create more successful homeowners. They were just doing it from a cost and efficiency perspective, and we were doing it from a value and education and advice perspective. And what we realize is we actually aren't competing against each other. If we were smart, we would find a way to marry those two things. And so that's really what we've done as an organization, is we've said, let's not make the client choose between a frictionless, relatively easy, less arduous process or between getting advice, guidance, strategy from a highly financially literate mortgage advisor. Let's just give them both. And so that's really what this partnership has become. And that's really where I think the future of our industry is headed. It's, the consumer is more and more and more going to they're over our heads. They're online, they're running numbers. They want to get pre-approved without talking to a salesperson. They want to look at real estate without talking to a salesperson. They don't want to engage with anybody until they have to, until they're ready. Right? I was talking to one of our teammates yesterday, and it's like, well, you can go through an automated process on the phone, right? Do this, do that, or you can go through an automated process on an app. But at some point, if you have the ability to press 0 to talk to a human, why do you hit 0? Well, you hit 0 because you want an answer, right? Or you've reached a point in that process that is confusing or challenging, and now you want human advice. That's essentially what we're doing, right? We're letting them go as far as they want or they can. And then we are letting them know the human is right here. And then we advise them on how that human can help them, right? What can we do as mortgage advisors that they can't do in an automated fashion? And that's a very unique set of skills. And so we need to teach the consumer that they don't have to choose. And I think that's where the mortgage industry is, it's where it should be headed, right? We shouldn't have to choose between one or the other.
Where do you think that financial literacy needs to be then for the consumer in order for them just to automate everything through? I mean, 40 years ago, it was, oh, I need to get 2 years of tax returns or 24 months of bank statements. 30 years ago is the same thing. 20 years ago is the same thing. Now it's still the same thing, yet the evolution of financial literacy hasn't. And the consumer, as much as they would like to say they are better informed with the use of ability to have information on the internet, they still have the same frustration of providing 2 years of tax returns or 24 months of bank statements. So that actually hasn't evolved at all. The consumer hasn't even evolved in providing documentation. So as much as the mortgage industry, as our policies and procedures can advance, if the consumer hasn't advanced, how can we have the expectation that the service and the flow through process can advance and change?
Yeah, so I think there's two things there. One is the consumer experience in terms of what they have to provide, right? The challenge of finding documents, collecting documents, sending documents, understanding what documents they're looking for, which I believe in large part we have solved, not entirely, but there's the innovation that we are seeing, especially with our OpenAI partnership, is pretty mind blowing. Most of our loans that we did, or over half of our loans just last month, didn't have a human underwriter involved, right? It didn't have a lot of back and forth in documents. And so what it allowed us to do is use those incredibly talented humans to do the work that needs nuance and needs strategy and creativity, while they still were able to, get other deals done, but they just didn't have to put time and energy into them. Mm-hmm. So we'll always be on the forefront of saying, how can we remove every friction experience from the consumer to where at some point they don't need to do anything because we have all the data, we have all the financial knowledge about them. So all the time we spend with them is to actually help with real financial literacy, right? Because there's people that are liquidating their assets, that are paying taxes on it, that are shortcutting their retirement to buy a home. They don't need to do that, but they don't know that. Nobody's taught them that, right? Or they're not doing anything because they don't think that they can qualify. And so our entire premise is the mortgage advisor will actually evolve into just a financial services provider, and mortgage will be a part of what we help the consumer with. But when we started Neo, the whole concept was, let's be the most valuable team of people in that client's life in every aspect of real estate or finance, not for 30 days, but for 30 years. Because anyone can own a home. It's not that hard. It's just paperwork, math, and payments.
Correct.
But to become a successful homeowner, a very well-rounded homeowner, where you have the right insurances and life insurance and the right financial plan for retirement and parents and children and all that kind of stuff, that's where you need real advice and guidance. And you need that consistently and proactively. And so that's what we've built here, right? Is that if you ask our clients, they're choosing us because of our commitment to help them proactively for 30 years, not our commitment to close their loan quick and on time with a low interest rate. And that's where the financial literacy comes in, right? Is that we don't expect people to figure out their real estate and financial life. We've taken that burden and we've said, we're just going to take you somewhere where you likely wouldn't go without us. Mm-hmm. And so we think that gives us a phenomenal leg up, because we're not selling the same product as other people. And yet we've taken, with our technology, we've taken all of the frustrations of like, well, why doesn't every mortgage company do that? Well, it's because they're chasing documents and they're checking boxes and they're, doing all the stuff that technology has somewhat solved. And so we think we can change the mortgage industry into more of a financial services state, and give the consumer something that they're not expecting.
It's interesting you say that, Ryan. Prior to the show, you mentioned to me that you don't have any mortgage loan processors. You have originators, but you don't have any mortgage loan processing in operations. And so if you're an originator and you don't have a processor, but you have amazing technology, how does the originator, because it used to be when you first started a business, you would hover over some kind of cubicle and say, hey, where's my deal? And is it moving forward? If you don't have that safeguard and you're still collecting documents, and you're still selling rate and you're still trying to figure out what to do, how does the originator create a better experience when they're either chasing documents or trying to figure out the flow through process in operation, so they can feel better as the originator to their borrower.
Yeah, so I want to be really clear. We did not eliminate the processor. We just repurposed them, right? So processors historically were, chase this, go to that, balance, go to title, order this VOE, do this LOI, all the stuff, right? So we have credit analysts now. We moved our processors up in the process. They're now credit analysts. So like if you're a mortgage advisor at Neo, you don't calculate income, you don't look at assets, you don't run AUS, you're never actually like in a file. Like a deal could come through and we could open ChatGPT because we have that OpenAI integration. And we could just say the Smith file just came in, pre-approve it. And the system will pre-approve that file and spit out that pre-approval out to you and to the consumer. If that file runs into an issue, right? If the technology can't deliver that pre-approval, then the credit analyst steps in. And the credit analyst will do the nuance, the creativity, do the work necessary to make that pre-approval a reality. So our mortgage advisors have kind of the tech aspect and the credit analyst to make sure that every client has the best opportunity to own a home. And then what we've done is we said, okay, the loan specialist, because typically a processor is going to be like contract to close, right? And they're going to update the client. They're going to let them know what documents they need. But it's very rare for a processor to elevate the experience of the consumer from contract to close. They really just manage it for the most part. And they're reactive to the incoming expectations or the client's lack of confidence. Because our technology does most of that, our loan specialists, their entire purpose is to elevate the consumer experience from contract to close. Be very proactive with communication, actively working through the loan estimate, working through the loan approval, going over the appraisal, going over the closing disclosure, letting them know consistently you have nothing to worry about, everything's great, we're really excited. And they enhance the experience to allow someone to experience the joy of homeownership as opposed to the anxiety and frustration that most people experience. And so again, our technology is simply meant to allow our humans to do the most human, emotionally intelligent, important activities, not the paper pushing, not the doc collecting, not the box checking. And when you get all that stuff out of the way, it's pretty amazing what type of experience you can deliver.
Yeah, it definitely is. I often say this: money's not emotional, people are. And when you bring in, and when you can enter into the emotional experience for the borrower and take out the frustration or stress of what it could be, it creates not only for a better experience, it also creates the flow through actually from beginning to end also, because you're creating expectations as a result, not only on the document level, but also for the emotional level. So you can say, this is how I'm going to be your pilot. I'm going to land the plane properly, and this is the way it's supposed to be, right?
Yep.
And speaking of landing the plane properly and how things are supposed to be, Michael Kelleher, welcome back to the show. Great to see you.
What's up, Mike?
Great to see you. I was battling a little bit of traffic getting here. It was a popular show, so I had a lot of people trying to come and see Ryan.
Nice.
Yeah. So as we're talking about operations and things that we need in order to support our business, we actually also have sponsors for our show, Ryan. And as we enter into the middle of the show with Michael Kelleher, we like to give the proper amount of credit due to the sponsor, because without them, we actually can't have a show. So let's take a word from one or a few of our sponsors. Ange.
Verifying income for all your applicants means you need roughly 23 different vendors and waste hours and hours of your team's time. But with TrueWork, it's just a single place for all your income verification needs, so you get the most advanced VOIE solution. TrueWork combines all major verification methods into a single, easy-to-use platform to give you a completion rate of 75%, cutting your costs by up to 50% and getting real results for your team. TrueWork, your one-stop shop for income verification. Click, verify, repeat. Talk to our team today.
Fraud. Can you afford the risk? Today's automation and technology-based trends demand solutions to fraud threats. Funding Shield provides lenders and investors real-time transaction level verification. certified wire fraud protection to protect loss of funds at closing due to cyber-based and other threats. We help improve your bottom line through fraud prevention, risk management, and validating the parties and documents involved in mortgage closings. Prevent fraud and theft on your closings.
Hey, welcome back. Talked a lot about operations going in here. Ryan, what was it like to segue from where you were without the backing of Better to having what you just spoke about for a while? What was the mindset when you knew you had a much just a whole different view on operations, and you talked about that speed, and you talked about eliminating a lot of this back and forth, things stuck in email. How has that changed the mindset and the culture of Neo itself?
It just allowed us to kind of expand our thought process on what's possible, because, prior to having Tin Man and our OpenAI partnership and all these really cool things, we didn't think we were missing anything. I've been one of the top 25 originators in the country for quite a while, and because I really coveted other people's advice and mentorship, I would always go and I would be in all the masterminds and all the top groups with all the top originators, and I would ask everyone the same question, like, how do you do as much business as you do? Right? What makes you unique? And this is from an originator's perspective, right? The top loan officers in the country will tell you everything, but they will never say technology. Not one of them one time said, my technology helps me be the best or be efficient or lower my cost. It was never in our vocabulary. And so no one ever thought that they were behind there. Right? We didn't think we were missing anything. We just kind of this misery loves company situation, right? Where we all were using Frankenstein's monster of, big LOS and a bunch of bolt-ons. And when we realized, I tell everybody the story, like I was telling Michael earlier, when Better reached out to us, it was a hard no. And then we stayed curious. And when they showed us their technology, I went from curious to scared, because this was the first time in my origination career that I had seen a platform that was capable of creating a much lower cost product at a much more profitable opportunity. And I just thought they're going to be so much cheaper than us and more profitable that's going to be really hard for anybody to beat. And so, over the last 18 months since this partnership has been in play, it's been really cool to start to reimagine what's possible. I was at previous organizations where I would want one page changed in the LOS, and it would take me a year. Right? I was on a call 2 hours ago where I wanted something changed, and it took 30 minutes. Because, I don't have an IT department here. We have an army of engineers that say, like, what do we want to create? Like, what does the future look like? And we've never looked at it through that lens before. It was always just, well, this is the box that we have to stay in. And, if we want to grow, we need more people. Why? Because you got to wait for the spinning wheel, and you can only have one person in a file at a time. And you can only, everybody's got their slow process. Now you can have 100 people in a file at a time. Now we can have 100 files open at a time. We have multiple people working on certain aspects of the product at one time. We have technology working on things that humans don't have to. So when you look at like a blank slate of opportunity, you start thinking differently. You look at scale differently. We have a blueprint where our mortgage advisors are going to help 100 families a month, working 8 hours a day, no nights, no weekends. I would have never put that together before, right? Because it wasn't possible before, right? It would have taken far too many people. It would have been far too expensive. And, we wouldn't have had the fuel to do it, right? And so like a lot of this is marketing and getting to the consumer first as well, which we never did as originators. We always had our hand out. So it's really created a whole new vision for what's possible. And we look at the future of the industry differently because of it.
I had a conversation with my wife about the difference between Gen X and everyone that's younger. Gen Xers come into the mortgage industry, and because we didn't have as much technology born in the 60s and the 70s, it was more of I'm going to figure out how to do it, and I'm just going to go do it. And then if there's Frankenstein's monster, I don't really care as long as it's alive.
Yeah.
Right. And so that's what you just talked about. But now we have a younger group of financial professionals, whether they're degreed or not is irrelevant. Actually, it's more of they want to be a part of community, but yet technology takes away part of that community. They're not communicating as much maybe with processors or credit analysts. So what do you think can be fixed so that more professionals can enter into the mortgage industry? How do you fix that?
How do we attract more in?
Yeah.
How do you
attract them and then get them to want to stay? Because it is a stressful industry when you have humans asking for help on the realtor side or the financial services side, but you have computers saying, "Just get this." There's no emotions to documentation, but the people who are providing it are definitely emotional.
Yeah, I think being on the older segment of the millennial generation myself, and then all the generations to come from that, a big part of that demographic is fulfillment, right? They generally want to be fulfilled with the work that they do. And I've told people for years, we're not actually helping anyone as loan officers. We're not. We're like the pharmacists of the real estate industry, right? You want to buy a house, you need money. Someone tells you go get money and we give you the money to buy the house, right? Like that's not really helping anyone. That's just fulfilling an order. Now, some of us fulfill orders better than others, right? Some of us are, might be a little bit more creative with the order that we give. But if we really wanted to help people, right? If we wanted to make an impact in someone's life, that's the first step, right? Then we need to help them understand life insurance and generational wealth planning and tax planning and, how to grow your wealth while being a homeowner, how to acquire more real estate, how to work with parents and children in planning. Like that's where everybody fails. It's not buying the home. That's the easy part. Right. And so if we can show this next generation that we can really help people, right, that we can actually make an impact in someone's life, not just sell them debt, then I think we can attract more people in because they genuinely would be more inspired by the role, right? They'd be more fulfilled at the end of the day with the work they're doing. Because when you put someone in a loan and give them a house, you've just given them a liability. And if you're not there, you've actually put them in a situation that might be more untenable than they've wanted.
Right.
So I think that's what we have to solve if we want to attract more of a younger generation, is we have to solve for their fulfillment in their profession.
So would you say that satisfying fulfillment has some kind of impact on them? And so if you're to emphasize impact at the moment, would you emphasize impact over volume? And how do you measure that impact inside of your company in a way that drives that type of behavior?
Yeah, a good example is we have our we call it our change makers trip coming up at the end of next week. And the people that go on that are not just the highest producers.
Interesting.
Right. They're the people who are nominated for our ethos. They're the people who are nominated based upon the amount of wealth they've created for the families they serve. Like our metrics are very different. Because I say this all the time, there's a massive difference between production and performance. There are companies and loan officers and people that will outproduce us by magnitudes. But there's no one who will outperform us. And over time, that performance will create the production.
Wow. You speak as if you're like Eleanor Roosevelt, because it really just creates more impact on how someone feels versus just putting out and punching out numbers. And it's actually
do a survey of everyone in the mortgage industry. Who got into the mortgage industry because they wanted to make an impact?
Mm-hmm.
Right? Who got into the mortgage industry because they wanted to genuinely help people? The answer would be no one.
Right.
We all got into the mortgage industry because we heard it's an easy way to make money.
100%.
Somebody else was making money
and
they told us to make money. So we got in to make money. We're all solving the bottom of Maslow's hierarchy of needs, right? Once you get to the top and you've made the money, then you start to realize, okay, if we want to get to self-actualization, let's actually solve the internal problem, which is like, why do I wake up every day? What's it like when at the end of the day, what am I going to be proud of? Selling a bunch of loans, selling a bunch of debt? No.
Well, then how does it become a dopamine effect and to where if you're training an originator to be successful, and let's say they're successful for a year, and then you're like, okay, let's that's great. You were successful, but how do you train them to be consistently successful so they can have significance rather than a dopamine effect of, you could be successful for 8 months and all of a sudden you got lazy or the dopamine went away and you're like, ah. So how do you train for that?
If you do it right, it's not a matter of effort. It's a matter of like, if you really can show someone how you're going to help them for the next 30 years, that person then goes and says, and you never realize, like, what I just went through with this, mortgage company was amazing. Like what they're offering is different than I've ever experienced. Like if I had $1 for every time one of our clients said, like, am I talking to a financial planner here or is this a mortgage company? Like how much, like, do I have to pay you monthly for this service? And we say, no, right? This is all a part of just what we believe we should be in your life. Right. And then that person goes and tells another person. And then we get that referral opportunity. And then a realtor sits in on one of those consultations and a realtor sees it. And they think, I never want another client to just get a loan again. Because now the realtor has a different value proposition. Builders, same thing. And so this shouldn't have to be an effort thing. It should be a value equation. And if they're successful for 8 months by offering value, that's not just going to go away. Right? They don't have to go to the next open house to stay successful. Right. Especially with our model, because we're constantly connecting the mortgage advisor directly to the consumer online. So we just get to keep having more conversations with people that don't even know what we do exists.
Do you think?
Yeah, I think that's what makes.
Go ahead, Mike.
That's what I'm always attracted to as far as the message you have. You have a system in place that's built around pillars of what a real homeowner should be thinking about. You don't say we build generational wealth. You show the pathway to build generational wealth, and you bet on the right technology. So you get Tin Man behind you, but technology will always get better. Different places can offer different greats, and there'll always be just like a great horse, every Kentucky Derby, every 3 years or every year, there's new horses come up. But that message will always be with people. They'll always remember it for 30 years and you'll fine tune it. And I think that's really what differentiates you is you don't overcook it. You just, the system that works. You're not fake about it. And it's actually a huge vacuum. Like no one's giving genuine advice in that area. My question would be, do you think they would have the same experience if you also had a financial wealth arm? Or do you think it's the disarming part of the fact that you don't make commission on the financial planning part?
Good question.
Most of America would not even qualify for a financial planner.
Yeah.
Like they don't have enough money for a financial planner to pay attention to them in a way that would be meaningful. Right. And so what we need to solve for is how do we give that 92% of the population the advice, guidance, and strategy they need based upon their current financial position, so that at some point a financial planner makes sense. Right? We're not talking about people that have hundreds or thousands of millions of dollars in liquid funds after they buy a home. Right? We're talking about people who are finding money in the couch to buy a home, which is most of America. Right? And so we're not looking to be a financial advisor, but we are looking to be the one place they can go to where they get guidance, advice, and strategy, but they don't have to do it reactively because most of America's pretty insecure financially, right? And that financial insecurity means that they're going to kind of stick their head in the sand. But if we've made the commitment to them, if I've said, Michael, like now you own a home, now here's what we're going to do for the next 30 years. Here's what you're going to hear from us. Here's the tech you're going to use. Here's our financial services app where we're going to track your net worth. Here's how we're going to help you in all these areas, right? And every single year we're going to meet and we're going to plan what's happening in your life, what's changing, what's new, what's going on with parents, what's going on with children. All we need to do is ask the right questions, right? And then we can help them set goals and plan for the future. If we don't do that, who will? No one.
No one for that person, right?
For that person, which is most of the people.
Yeah. Well, or someone's inheriting a house, but they're also inheriting problems. And if you have those answers for them and you nurture it, before I ask, the final question, have you found it to be a a new, and I know you have an amazing team behind you, but does it bring out extra work to build a CRM about handling further up channel and further down channel? Is that
Yes.
a big part of what you do?
Constantly. We're always looking at up leveling, like how can we add more value to the consumer? How can we do it in a way that's consistent and scalable and dependable? That last word is the most important, right? Because if we help 1,000 families a month, there's no way that I could ask our team, like, let's just take one originator who helps 10 families a month, right? I can't ask that person to make a bold financial commitment that we're going to help someone grow their generational wealth proactively without everything in place to support it. Because there's no way that I could expect Bob, the mortgage advisor, to do that for 120 people a year. And then it's going to be, 300 the next year and 800 the next year. Right. So when we built Neo, that was the premise, is that we can't depend on the mortgage advisor to be the one to execute it. Neo has to execute it on behalf of the mortgage advisor, so they can be the ones that get to commit to it and we get to execute it. So we have a whole team of client success managers. These are people that we hire and we train, but they're not loan officers, right? But they're assigned to the mortgage advisor team so they can execute on that. And then all of our, technology and all of our systems, we have to teach our clients how to use them. We have to teach them the importance of using them. Our CRM has to deliver it in a way that isn't noisy, but found as valuable. And that's an ongoing evolution that will always be, looking to up level.
That's amazing. And you seem like next time we have you on the show, I think we have to really dig into, that's like the ultimate multiplier, because you're giving a system that touches people to build generational wealth, and over the years, their family's part of that generational wealth. And you gave a small example of it, 120 going to 300, but there's a derivative of that as well within the families you're impacting. And that's the first time I've heard it, really said the way you say it. So cheering you on, that's unique. In a technology world, you clearly still have a boots on the ground, relationships matter model. And I can see why so many loan officers are at least curious to call you and find out what you're doing over there. And just want to thank you for joining us on this journey into the heart of mortgage innovation. Remember, to our audience, every mortgage has a story. We're here to help you write yours. If you enjoyed today's insights, please subscribe, share it with your network. If you see it on LinkedIn, give it a repost, connect with us on social media. And until next time, keep pushing the boundaries and uncovering the stories that drive our industry forward.